Hey everybody, this is Taylor, and this is the free video for December 2nd. So, take a look here at the Volatility Index. Interesting way to start the month of December. So you get the big spike here in VIX. Before I add more exposure on long positions, I would like to see the VIX come back down. Under 25 is a start. But ideally, though, bigger picture thinking, I want to see the VIX kind of retreat back towards, back towards a level of safety, so to say. So I'm trying to be patient here. There's definitely a handful of spots. We'll take a look at a few of them here. The semiconductors, Tesla, Amazon, Nvidia. Definitely some spots I'm trying to get some exposure into on this flush in the market. But with VIX elevated here, it would be nothing for us to wake up tomorrow and the market's down another 1%. So trying to be a little bit patient, trying to be disciplined, but also trying to kind of tune out some of the volatility and the news and all that stuff here and just focus on structure over everything. And a lot of times for me, the most important structure in terms of the trend is going to be found here on the weekly chart. So often we get that 2 to 3 weeks of selling pressure where, your daily chart admittedly starts to break some structure, you start to break support, momentum starts to shift. So needless to say, things get a little bit ugly on your daily chart. But then looking at the weekly trend, a lot of times all that short-lived ugliness is your dip to the weekly 21 EMA. And in terms of the ebbs and flows of the market, the dip to the 21 is not only completely normal, but so long as your trend continues, it offers one of the better buy-the-dip opportunities. Now, don't get me wrong. You look at the QQQ here, and since we bottomed out back, in March, April, after COVID, you've had 1, 2, 3, 4, 5 dips to the weekly 21. All of them great buying opportunities. Understand at some point in the future, the market will pull back to the 21 EMA, and she's going to keep pulling back. That's when you potentially start to go into a downtrend. As of right now, however, weekly structure continues to hold up here. So I got to look at this as the same bullish market I was looking at a week ago, 2 weeks ago, 4 weeks ago. And if anything here, with a little bit of the selling pressure, it offers better entries on some of the best trends out there. Now, my opinion will change here. My plan of action will change if we end up fading under the weekly 21. But as we currently sit here, structure holds up on the weekly chart for the Qs, structure holds up on the weekly chart for the S&P, and I'm going to keep moving forward here looking for the trend to continue until that changes. In terms of daily charts, S&P does a good job of getting back above the 50 today. And I do think you got some potential here to start to really squeeze any shorts. But again, with volatility still, up there at 2 to 3 ATR, might not be the smoothest. So there could be more volatility to come. I'm going to anchor that to that weekly chart. Now, in terms of open positions on our end, we did take profits on Apple yesterday. Finally got that push into our target of 170. So pretty textbook as far as what I like to focus on here. It's simpler. Find a trend, find a squeeze. If you can find 2, 3, 4, 5 squeezes, even better. But with Apple here, pretty textbook, weekly, 3-day, and of course the daily squeeze. So we're taking a good entry back here on the 9th of November at the 21 EMA in the daily squeeze. And we got the initial push. Had to sit through a little bit of a flush, but we're not chasing it and getting long up here. We're getting long back there. So a good entry allows you to sit through a little bit of downside. And our target was 170, which lined up with about 3 ATR on the weekly chart. So we took profits there, and now potentially we're going to try to reload, jump right back in here, because despite the push, the beauty of all this is that Apple hasn't even fired the weekly squeeze yet. So I think you got a bit more to come there if the market does hold up. We still have put credit spreads for January expiration here in Amazon. Okay. You have to sit through a bit of a flush here, but the structure of the weekly squeeze continues to hold up really good. So volatility just continues to rip, and the indexes just keep selling off. Down goes Amazon. But if into the end of the month, into early January, your QQQ and your S&P 500 are back at brand new all-time highs, I think you got a good shot here at this weekly squeeze finally firing long. And my target for that move is about 39.50 to 4,000. You're going to need your QQQ push in here. But we got some positions there, good structure. And then for Tesla, it's a bit of a chop fest, but typically that's what a daily squeeze is, a chop fest. You still have stacked EMAs, you have green 10x bars everywhere. Continues to hold structure really well. it's not a Tesla thing right now. It's not an Amazon thing. It's not an Apple thing. It's a VIX S&P QQQ thing right now. So based on the structure, based on green 10x bars on your major time frames, volatility dies down, market rallies back towards the highs. I think the daily squeeze here for Tesla's got a good shot at firing long, taking us to 1250, maybe 1300. So we've got some put credit spreads there to expire in a few weeks. And we do have some Netflix here. Netflix, the only one getting a bit sloppy, but very much like your S&P, it might just be the dip to the weekly 21. So nothing I would add to on Netflix just yet, but we are going to see if the weekly 21 holds a support. Then if we can get a bounce back towards the daily 21. But that's what we're working here. That's what we're working with here. It's been a long day. I can't talk anymore. That's what we're working with here for open positions. In terms of a little bit more exposure, I would like to work here. Volatility dies down. S&P cooperates. I think the semiconductors look really bullish. So you got your pullback to the mean, and now you're printing a brand new daily squeeze with stacked DMAs and green 10x bars on the monthly, weekly, 3-day, daily. So not to be repetitive, but trying to be repetitive on the things that I think matter. Semiconductors are going down. If volatility index goes higher for another week, 2 weeks, 3 weeks. If everything kind of settles down here, what a good looking structure, right? So I think that should be poised for a continuation. Market willing. And with that being said, here's NVIDIA. I've been waiting for this for weeks. Pull back to the 21, brand new daily squeeze, momentum, head to toe looking bullish. So that's definitely an interesting spot. I think John did a trade in the options room for NVIDIA today. And AMD kind of fits the same bill. So my focus right now is still to the upside. And as a trader, you never want to marry your ideas. I think if you're going to marry anything, you marry structure and you marry trend. The trend is bullish. The structure holds up just fine. I got to continue to look to take advantage of the selling pressure here. In my opinion, in my plan of attack, that will change if we start to blow under the weekly 21. So I'll make sure I hit you all with an update if things change here. But otherwise, that's our focus. Got the pull back to the weekly 21. We're holding some Amazon, Tesla, some Netflix. Looking for a little bit of exposure in the semiconductors. And that is what I've got for y'all here tonight. So I hope you find this helpful. If you're not already, go on ahead and subscribe to the channel here. Give the video a thumbs up. And I look forward to talking with you in the next one.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video. And if you liked the video, go on ahead and comment down below. Hit that like button. And make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.